Light the fuse and burn it off.
Alright, so basically, I am introducing draws to trading. Ladies and gentlemen, all members of the, the people who want to be successful at trading, I have introduced how to make draws, win, lose, or draw. And there's actually draws in here. It's not, no, it doesn't. Oh, it goes for me and, oh, now I set my stop to break even. So then, therefore, um, it's going to be a draw, right? I'm going to be a scratch, right? Okay, that's one way to make a draw in trading, but there's a different way. And I must say, all ways you risk an initial amount, but then it goes a certain amount in your favor to become um, risk-free on the trade, therefore a net zero if you exit at, whatever it is, break even or whatever, right? My method is, so I risk, say, $50. I actually get out. And so I use 7 contracts, risking 50 ticks, sorry, 50 ticks, um, risking 800 or 1875 amount of money, which is pretty good. And then um, my risk-free risk is 280, which is 15% of that. Because I want my target one to be 15%. You'll understand this. Watch. So I enter in with 7 contracts. I get out of 5 contracts at, you know, um, at target one, which is 11 ticks away. So actually, I am risking. So this is a weird example. I don't know what I have my contracts 2 at. For some reason, um, this thing's not working, but I need another freaking thing right there. There you go. Yeah, we're good there. Okay, so yeah, those trades. What's happening is just um, I'm risking too little per this. So like if I really want to do this, 1875, let's instead of doing, yeah, I'm fine with 15%, whatever. We'll understand. Okay, here it is. It's I'm risking 50 ticks. That's how big my zone is. How about let's just do this right now. Let's say I'm taking this demand zone. I enter in there. Actually, it's above. This whole entire thing is actually for breakout. Um, there's not really anything to break out though at the moment. There's no opportunities, but whatever. I'm risking 50 bucks or 50 ticks, sorry. And oh, what? Yeah, I'm risking 50 ticks. And then I enter in with 7 contracts. I get out 9 ticks away. Okay? So let's look at this. Look at this. Look at this. So I'm entering in. This is my risk. Okay, this is my risk on the trade. I'm risking 1875. I'm risking almost 2 grand. Okay, almost 2 grand. But then I take 1 contract off. So I'm taking 7 contracts here. I'm getting rid of 6 of them. 8 ticks away, 9 ticks away, whatever. I'm getting rid of them. It only has to move this much in my direction. Literally, that's it. That's the smallest amount it has to move in my direction for me to be break even on the trade. It's a trick. It's literally a trick. And the only issue is if it's going to slice right through your zone, you're not going to have any retracement whatsoever. You have to retrace just a little bit, otherwise you're going to lose 1875, which is 1/4 of what I'm allotted to risk. I'm doing like this lead low trading thing. I'm going to. I haven't done it yet, but I'm taking breakouts, and it's supposed to move like this is a breakout. This is a prime example. Let's do it right now. Let's do it right now. Hold up. The breakout lower of this candle. If this bar goes red, current bar goes red, we're entering in. But 42. Let's go here. Our zone is actually 42, and we're short. And then we're actually entering with 8 contracts. We're entering in with 8 contracts at the low of this bar, 70.5 or 70.75. It doesn't look like this is gonna happen, by the way. Nope, it's not gonna happen. But whatever,
Order
that's what's
submitted.
happening. So 8 contracts at 70.5 or 75. Now 15% away. How much does it say? 8 ticks it has to move for me to be break even. And holding one contract just for the fun of it. You know, it's just a fun trade, you know. Not a fun trade. I'm just saying, like, I can just hold on to one contract for as long as I want, as long as this stop is not hit. So, there you go, 20%. Okay, boom. Here's my target, right? And this is my risk on the trade. So, it literally has to move the smallest amount to get me in. Obviously it's not anymore, but maybe the 5-minute shows it. Breaking downwards? No, it doesn't. It has to print another bar. Whatever. But I'm just saying, my plan is it breaks downwards. I fill this. Now I'm break even on the trade with this much risk to my plate, and I'm just gonna hold on to one contract for as long as it wants to go. And I'd actually get out if it starts bubbling against me. So if I'm short from up here, see this breakout, it broke this low, I'm in, I'm short, whatever. I captured like the smallest amount to get break even on the trade, and now I'm holding one contract this entire way.
Order filled.
Yeah, there it goes. So it just broke. Oops. Now it should be out 7.
Order
way
submitted.
before that.
Order
way
filled.
Before that, sorry. And this is not even unless the 5-minute is showing like a actual 2-bar setup, which it didn't, but whatever. I could take another one going downwards, but whatever. I didn't have the chart set up. I'm having the trade set up basically. Basically, I risk 42 ticks. I just need to get 8 ticks, and I will be break even on the trade. And then I'm going to hold one contract, rolling. So really, I make, in that small 8 ticks with 7 contracts, holding 8, but I'm getting rid of 7 at 8 ticks in my direction, I'm risking $280. Or, I'm sorry, I'm making $280 in my target 1, which just so happens to be, using this algorithm here, my target 2 is 280, or my risk total after these 8 ticks is hit, my risk total is $280. So really, I'm in with 8 contracts, but I'm actually leaving 7 of contracts as quickly as possible just to cover the amount of risk I have on the trade with one contract, okay? Just barely, just enough, right? So I'm risking 280 on it. I want to be able to risk 280 on a trade. I can change this all I want. You know, I don't know the relationship between these two yet. But all I know is I want it to go a very small amount in my direction to get me break even. It's a trick. You can't be caught off guard because the amount of risk I'm taking on is more than the amount of reward I'm probably going to get. So this was a draw, this one was a win. So this one was a draw, therefore it should be, this was 1, this was 1, but I said round down. So whatever. Just say if I lost $1,500 if I lost. And a loss means I don't actually capture the smallest amount. So like if it's going to break out upwards right now, say it breaks these lines, and my stop is like way down here, it needs to go like, it needs to go this far, you know, it needs to go that far for me to get out. And I can bring this lower and lower and lower and lower, just like a small, such a small trade if I want to. And all it takes is just adjusting these risks. I actually need to risk more on the trade and just keep this the same. I have to risk more on the trade to bring my target even closer. But as far as I'm concerned, I'm looking at bigger picture. What can happen on the bigger picture? I'm looking for moves down, capturing all this free space. See all this free space on the lower time frame it is as well. I want to capture this downwards. So I would take bubbling actions here on the break of these lows, anything bubbling downwards. And by bubbling, I mean just a wick folding over a wick. Like if this current bar was all the way down the ground, breaking its lows. On the smaller time frames, of course, I would enter in. But, and I would take on a decent amount of risk, but for a good purpose. I'm getting out so quick, so quick. And if it goes against me, I don't care. I'll take the draw, whatever. Win, lose, win or draws. I don't care. Like, I'll draw on the trade. It's no big deal to me. A winner consists of the it hitting 8 ticks, you know, T1, which is super quick, dude. It goes in like 10 seconds. You should be risk-free in no time, really. And then you have one runner. You really have one runner. So then um, you have one runner. So if this breaks up to the upside, I could probably do it this way. That's where I'd go. Let's just say it. Let's just call it like that. This breaks this high. Let's just buy. Yeah, buy. I'm buying. So I bought, and now it should go 8 ticks. And if it goes 8, if it goes, so I'm not risk free right now. I'm not risk free. I repeat, I'm not risk free. I'm risking almost $2,000 right now. It's a lot of money. Once it fills my target, I am risk free on the trade. As far as right now goes, it is not. And obviously, this is not a zone I would take. I would take, it can't be a hammer candle. The base doesn't. It has to be a bullish fib or a strong, or it could be like this, right there. And then it retraces a little bit and breaks that. It needs to be cleaner than what we have going on here. Anyways, regardless, it worked. So now we're risk-free on the trade. We have this much risk for any amount of free space upwards. We will take it. If it starts catching on fire, we will take it and ride it, whatever we want. And keep in mind, we're only keeping one contract rolling, which is it takes probably yeah, it takes this amount to capture what we just made, to double our money. So it went just this amount to make 280 bucks, to make another 280 bucks, because we only have one contract now. It has to go all the way up here, which is not entirely hard. It's not bad hard to do that. Like, you can catch winners with this bubbling method because it's not even like a trade. It's like, it's really not, I don't care that much about the trade, in other words, because it bubbles anywhere it wants to go. And I would go, I'm bullish until it hits my stop, or it starts going against me and making wick over wick, something like this, something right here, or something set up right here. And if it breaks this low right here, this low, I'm out, you know what I mean? But it has to do that to me, right? So let's just see what happens. I'm speeding it up. Oh, I'm sorry. Okay, boom, stopped out, right? If my stop was down here, just picture it if it was, just kidding, or whatever. I had this wick, whatever, right? So now it's against me. And if this current bar were to bubble downwards and break this low, I'd be out of the trade here instead of here. And anyways, if this formation happens and starts bubbling and breaks that low, up here, when I'm super in profit, it doesn't matter to me. When it starts going against me, I get out. And we will catch winners. I'm telling you, we will catch winners because it doesn't go against it. It won't fold over. This current bar won't go red and break this low unless it is bearish, dude. It is bearish, right? So like this, it broke this low, boom, it went bearish, and it got freaking stunned and turned around, all to just go bearish again. Very strange. It's hard. But obviously we do this on, I'll take any opportunity to get out. I won't take any opportunity to get in. There's little differences. I might not have taken this because judging by the 5 minute, 15 minute, I look at every single time frame. Well, to me, every single time frame. Daily 240, 60, 15, and 5, and 3. So I look at all those together at the same time. But anyways, that is how ultimately to create draws. This was a draw. Therefore, I lose or make, just very small amounts of money. I mean, this shouldn't be 70. I gotta fix a couple things in this stuff. I don't know why it's like that. Ever since I did round down, yeah, that shouldn't affect it because we didn't hit target 2. Anyways, it looks good. As far as Lilo goes, I want to do the 7,500 is the total risk I have that's trailing max drawdown. I would like to do that, and I would just risk everything, on each trade. But I can't have a loser, man. Like it has to get the 7, you know. But if I have this let's say 0.5, that's a weird one. 0.5, right? So really, yeah, I can't take these then. I'm looking for holding on to one contract. 10%. I'm risking actually 10%. That makes more sense to me. So, because this is varied, very varied, because there's zones 115 apart. That's pretty wide. It's a long wick, whatever. And then there's 42 ones. Like, that's a small risk, right? That's a pretty small risk. And I get to do for my target 2, I get to hold on to 3 contracts. With my giant risk, I get to hold on to 1 contract. I don't want this to be like 0.0. Like, I need to be able to take these trades. So that's what you have to dice up in here. And anyways, dude, it has to go 4 ticks. Bro, it has to go 4 ticks out of 42. So it has to go 12 ticks in my direction versus 115 in the other direction. I don't care even if you don't even looking at the chart and you're just pressing this order. You are in class and just whatever. You know what? I'm buying right now, but my target is 12 ticks away and my stop is 115. I'm just gonna buy. Dude, chances are you're gonna hit your target. I'm not kidding. Like, even if you have no freaking idea what the market is doing, um, I really still think you're still gonna get, I mean, what's 12 out of 115? You're still gonna hit that. That's 10%. So we're looking at, yeah, we're looking at 10%. And that, how does that look? 112? Watch. Just super quick, and then we'll be done and complete, whatever. if it breaks this high, say, whatever. If it breaks this high, 115, and then we're going 10%. Dude, my dude, you literally have to catch a pivot in the wrong direction. As long as you don't catch a pivot in the wrong direction, I think you're going to hit your target every time. As much as I can create this trick to be a trick, in my opinion, it has to go this even smaller than this. The most trickiest it can be is the most beneficial in my opinion.
Order canceled.
That's what I
Order
want.
submitted.
That's
Order
what,
filled.
sorry. That is why I want to do heavy contracts with Lilo Trading, because they allow 30 contracts, which I can really scale in and scale out with this stuff. You know, I'll be trading the regular NASDAQ, and I'll be getting into this kind of trade with 115 ticks of risk and 30 contracts right away. Get out at 30 contracts, or whatever. Get out 12 ticks away. Boom, hit my target. Now I'm risking how many contracts on the NASDAQ? One. So I'm holding onto one contract on the NASDAQ to do whatever it wants to do up here. This is unlimited. What it can do is unlimited. And the only issue is it will, if it doesn't go just strong in one direction and I catch that trend, if it starts bubbling on any of the smaller time frames, 3-minute or 5-minute or 15-minute, if it starts going negative signals like this one, like this drop, I'd get out at these lows. I'd actually get out at this first bar break because this is a bullish bar. Clean free space underneath, and then the next bar shows red base, and it comes up, retraces, and hits that low. It breaks that low, I'm out. Anywhere in here, anywhere after the target. Either way, I'm risk free on the trade. I'm happy about it. This is how you get draw, win, lose, or draw in trading. And it is an absolute trick, dude. This is, I don't think hedge funds are doing this because it makes you risk quite a bit to make quite a little bit. But it's really a trick because how often is it going to go and hit your stop when you literally are risking, you know, my stop is at 100 ticks away and my target is 10 ticks away. Simple as that. You know, it's like 100 ticks away, like 100 ticks away, and then my target is right here. Like it has to go one, and then like the next one, it's there. You know, that's how tricky, and that's how, like, I don't know. I just think it's a good deal. Like I'd take that chance any day, and also that means we'll hold on to a risk-free contract and let that thing run. And if you're looking at higher time frames and seeing what can happen, possibly on the higher time frames, there's no cap to where this T2 can go. Like this one went 44. We won. So that's like, you know, if we didn't have this 44, say it was 0, we won 720 bucks, and then it went 44 more, which is really not that much, I'm telling you. Another 200 bucks. Just say if it caught a trend, gone 100, it's 1200, dude. That's $500 more. That's like a whole trade more. So that's really good. On the draws, we don't lose much. It's a scratch. It's nothing. And dude, it doesn't have to go much. So it really does not have to go that far to create a draw scenario. So I'm very interested in seeing what happens. So we'll see. See ya.